This is Rod Kusin, Spooman for Risk. Again, Monday morning, March 22nd, 2010. We had just finished our second video of the morning, and we're pointing out the big warning sign on the group reversal that happened just after 9:07. And as you can see, it was a big warning sign. And indeed, the market has retraced right back up as a result of, well, not as a result, but in conjunction with that reversal. Our traders are notified that this particular move could be a reversal that could wipe out any profits on the short trade previously taken. And now we're way back into the zone, much greater than we were previously at the first time we had our short signal. We're beyond the zones, so we would want to let the market continue to rally up, flatten out where the highs are just bumping into the zones instead of exceeding them. Now previously we had our short trade in here, came down, we had that group reversal right here, rallies back up, have another short signal here. But now, while this particular strategy is not tracking the zone, it's not tracking the zone. We know based upon observation that the probability will be that even with a pullback, the market is more likely going to continue moving up. So this short trade here really is premature in our estimation. The strategy is not set up at this time to recognize the zones. So I would ignore that trade, to be candid with you. I'd let this thing continue to move up, and I'd watch the zone very carefully. So once again, you see we're way beyond the zone. So what should happen is the market will continue to rally up, and as it did down here, let's go back just a bit. As the market was selling off, you notice how it continued to go way through the zone. These lows are way through the zone, way beyond it, way beyond it, way beyond it. But then, as it comes back right here, the low doesn't quite exceed the previous low, but it's a much safer place to trade in here, okay? Because that low is no longer, it's close to the low here, but it's no longer exceeding the zones. Now it could exceed it just a little bit, as it does here, and that's fine. This is not safe. This is safe. Now we see the same thing happening here. Way beyond the zones. So let it ride. Let it ride. Well, let's go back to our zones. We mentioned that the euro had gone way beyond the zones here. She came back down, but as expected, it rallied up again. And the highs are still not, or really are still much higher than the zone. So it makes sense to wait. Right here, right in here, this could be a good time for a short trade. Barely came above the zone at that point. Now take a look at what the strategy did. The strategy, while not taking into consideration the zones, started pulling short trades prematurely in here. Ultimately, they could have broken even, maybe a little bit of a profit, but not a particularly good time for trading. Here, the strategy settings again fire off short trades. little less likely to be premature, but based upon the use of the zones, these are also probably a little early. Now we're allowing the strategy at this time to trade multiple contracts, so we have several signals that are going at a time. Each time we have trade conditions, we get a new signal, and we want to track that. So if you haven't seen our other videos, very briefly, what we're using for the purpose of generating these trades is our group reversal system in conjunction with 3 different stochastic zones. We're using a 200, a 300, and a 600 stochastic zone for filtering our trades in conjunction with our group reversals. And the stochastics in this case, the only thing that we want to know is whether or not we're overbought or oversold. And we set our overbought zone to 90%. So we're above that right now on those 3 zones. It's also true when it comes to the 900 zone. Now once again, back to the zone. We're way beyond it. We want the highs to not go much beyond this top zone. Normally what we see happen is that it'll bounce even below it, into it, but it will not succeed it. So we simply, best thing to do is just to wait. Give it time. It's going to have some pullbacks like it did here, but ultimately it'll flatten out, and then you'll see a reversal that'll bring us back into the lower zone. Now let's revisit what we saw happen here versus here. Do you see the point? Having previously rallied above the zones, and now as it rallied back to equal highs below the zones, or at least the outer zone here, this is a much better opportunity for a short trade. Much better opportunity, much safer. Now we'll see if that works. Now you'll notice something too on the stochastic charts. As we rallied back to essentially the same price there, the stochastics were divergent. Couldn't even get into the zone, although the price was very, very similar. Apparently it's coming back. Okay, it's coming back strong. Now let's comment about this move here. Now we just mentioned that this was a safer place to trade than this. This too is a safe place right in here to trade relative to the zones. No trade signal was issued here because the stochastic zones had not yet been entered. So we just talked about the stochastics. There was a divergence here, not so much here or here, but on the 600 there was divergence. Okay. Now I like to track divergence through the use of a DPO. So real briefly here, as the euro is moving down, the lows of the DPO are getting higher. There's a divergence. Market is moving up. Here's a divergence on the highs. But you really don't see much of a divergence on this last high here. Not much. This is Rod Kusin and Spoo Man for Risk.